A hotel, hidden in the mountains of New Hampshire. The war wasn't even over yet, but another war was beginning. A war over money. Representatives from 44 countries sat in one room, exhausted, anxious. The world had burned. Economies were shattered. And the question was simple. Who would control the world's money after the war? The decision made in that room still controls the cash in your pocket today. Why does the dollar still rule the world? And what happens if one morning it doesn't? This isn't just a story about currency. It's a story about power. Today, if you're sitting in Pakistan buying oil, if a car is built in Japan, if crude is pumped in Saudi Arabia or soybeans are grown in Brazil, one thing connects them all. What currency settles the payment? The dollar. Around 58% of global foreign exchange reserves are held in dollars. Nearly 80% of global trade is conducted in some form through the dollar. Oil? Dollars. Aircraft? Dollars. Dollars. But why? Yes, the United States is the world's largest economy. That's true. But the story is bigger than that. Let's go back to that hotel. The Bretton Woods Conference. At the time, the United States held nearly 2/3 of the world's gold. Europe was devastated. Britain was drowning in debt. America had the factories, the gold. The deal was simple. Tie the dollar to gold. Let the rest of the world tie their currencies to the dollar. Dollar equals gold. Everything else equals dollar. That system lasted until 1971. Then President Nixon made an announcement. The United States would no longer exchange dollars for gold. Paper broke its link with metal. And the story didn't end there. That's where real power began. You might think, if the dollar wasn't backed by gold anymore, why did the world keep trusting it? Because trust wasn't just in gold. It was in America's military, its markets, its legal system, and above all, its network. Currency power is rarely just economic. It's network effect. If everyone uses dollars, you use dollars, because it's easier, it feels safer, it's more liquid. The dollar is plugged into the deepest and largest financial markets on Earth. U.S. Treasury bonds, a market worth over $25 trillion. When the world gets scared, where does it run? Into U.S. bonds. Here's the strange paradox. The more the United States borrows, the more the world buys its debt. The more indebted it becomes, the more trustworthy it appears. That's not magic, it's structure. The world trades. Trade requires dollars. To get dollars, countries buy American assets. Buying American assets keeps U.S. borrowing costs low. Low borrowing costs reinforce American power. A loop, self-reinforcing. But inside that loop is a flaw. It's called the Triffin dilemma. If the world needs dollars, the United States must supply them. That means running deficits, importing more than it exports, spending more than it saves. The world needs liquidity. America must provide it. Over time, debt grows. That's the uncomfortable math most people ignore. Today, U.S. national debt exceeds $34 trillion. That's not just a number. It's the foundation of the global monetary system. Because if America suddenly reduced its deficits, global dollar supply would tighten. Markets would shrink. The dollar would spike. Emerging economies would come under pressure. In other words, the world needs a heavily indebted superpower. It sounds absurd. For now shift the question. What if the dollar weakens? Some argue China's yuan will take over. Others believe BRICS will build a new system. Some say crypto changes everything. Interesting ideas. But reality is tougher. A reserve currency isn't just about economic size. It rests on open capital markets, rule of law, transparency, and political stability. China's economy is massive. But can foreign investors move capital freely in and out? Is the yuan fully convertible? Is China's bond market as deep and liquid as America's? Not yet. Crypto? A fascinating experiment. But global trade requires price stability, and stability requires trust. The dollar's true rival isn't another currency. It's its own credibility. If the United States ever becomes politically unstable enough to shake confidence in its bonds, If debt grows so large that interest payments rival defense spending. If countries gradually build alternative payment systems, it won't happen overnight. Currencies rarely collapse suddenly. They lose centrality slowly. The British pound didn't lose its crown in a single year. First came wars, then debt, then America's rise, then the network shifted. The real question isn't whether the dollar will rule forever. The question is what happens if the world moves toward a multipolar monetary system. Trade might fragment across currencies. Reserves might diversify. America might lose its cheap borrowing privilege. Its geopolitical leverage could shrink, and your country's currency might face greater volatility. Because when the center is strong, the circle feels stable. When the center shakes, everything trembles. Today, the dollar's dominance isn't just an economic fact. It's a measure of global trust. Geopolitical weapon. A sanctions tool. A quiet declaration of power. But every system carries the seeds of its own weakness, and often that weakness emerges from its greatest strength. The world needs dollars. America must borrow. Debt rises. Confidence holds, until it doesn't. So maybe the real question isn't when the dollar collapses. Maybe it's this. Are we standing on a system everyone wants to preserve, or one everyone knows cannot last forever, but no one is ready to replace? If the world wakes up one morning and decides the dollar is no longer the central pillar, what falls first? American power? Global trade? Or our quiet belief that a printed promise will always hold value?